Take all your money, buy Bitcoin.
Wake up every morning and say GM.
GM. Saturday, 22nd of June. Daily levels. So let's go. Let's look first at Bitcoin. See what the market's been doing. So BTC continues to have weak bounces off the lows. I would say we're getting close to an exhaustion bottom, which I think we've put in. So when you see these type of trend line moves and it's hitting it, and then it front runs it, that can be a sign of strength in that direction. There's two ways you want to see it. You either want to see it go down right down through it and reclaim, which would indicate an overextension, or it fails to go there, meaning that when it comes to the other side, you can see a bigger move higher. For BTC, we've reached probably a bottom in terms of sentiment. We've actually got a massive divergence here on the 4-hour RSI, which has been going all the way since these lows. So obviously based on many technical factors, if you look at volume as well, on these pushes, you can see volume spikes. Let's mark out each new push. We had high volume on that spike, and then most notably here, we had a volume div. So if we're looking at a couple of factors here, RSI obviously showing oversold conditions, volume diverging. So as price goes lower, so does volume. So it's not in harmony. If you're seeing a continuation, you'd want to see rising volume, and obviously price going lower while RSI going higher. Plenty of reasons to suspect that this should be a local bottom or close to it. As for, I'll just check on these. The ETF flows don't matter so much anymore, because as we go further and further in, it becomes less and less impactful each day, unless you see something major. So it's always worth checking, but 100 million outflows, pretty normal, right? It's reversing most of these inflows from a couple of weeks back. You know, over the space of 3 or 4 days, whenever there was high funding rates and a positive basis for futures, we saw about 9 and 5, which is 14, 15, 16, 17, 18, 1.7, 1.8 billion. And that's pretty much what has come off over the past 2 weeks, right? 200 plus 60 plus 200 plus 200 plus 150 plus 150 plus 150, roughly, plus 100. It's just basically these few days of high inflows have been matched on the other side. And that makes sense because, Bitcoin had 2 or 3 months of really high consistent inflows. And that first big wave of long-term buyers is pretty much exhausted now. And we need to wait for new buyers to come online and for another wave of, long-term buyers to come in. And then so in between that, you're now going to have more of a short-term market. And just like the way that Bitcoin, for us, right, not talking ETFs, talking about us as traders, Bitcoin has been a short-term market for the past few months, right? You have these short-term rotations where the rallies, you should take profit. The shorts, you need to take profit. The bounces, you need to take profit. Same on the shorts and the bounces. It's this choppy up and down market. Profit taking has been rewarded. Bag holding or sitting in trades hoping that they're going to be the final one that's going to get you Lambo, not a good idea. Now we're heading back towards the origin of this impulse. We have a couple of levels from previously that were untouched. If you remember all the way back, the CPI day was here. We had an impulse from it. There was also a non-farm payroll day. We had an impulse from it. And neither of those levels have got hit yet, which for Bitcoin is usually a sign that markets are going to come back to them. So it's one of the things I want to put on your radars that you should look out for. And I'll show you a couple of examples of exactly how this works. We go to the calendar and we look at some of the big moves that has happened on BTC. Let's say CPI from previous months. We had obviously May 15th one I marked. We had April 10th, March 12th, February 13th. Was any of those a big mover? April 10th. March, was it March 12th, 13th, February 13th. Yeah, not for those individual days. It must have been FOMC then. Oh no, it was the non-farm payroll, sorry. So, NFP from the previous month. I want to show you the example of this move. So it was the non-farm payroll from the start of May. So if we go to NFP here, we look at the May 3rd. This was the day where we had forecast 238 and a big miss to the downside, which is considered good for markets. I've talked about this a lot. If the jobs market is showing signs of weakness, it pushes the Fed closer towards interest rate cuts. So May 3rd is a good example. And this is something you guys should study, by the way. This is a really, really good study idea. Hint, hint. Study the past data and what price does weeks later, right? So that was the non-farm payroll where we pumped up, and from that day. But there is one example. That was not it, sorry. That's the one that's untested. Yeah. There was another big move in the market around one of these dates, and I cannot remember exactly which day it was. Might have been Wednesday, end of Feb, or it was probably an FOMC meeting. Anyway, the point is, let me see. If I can remember it quickly, then I'll do it. If not, I'll move on. Could it have been core PCE? Could it have been core PCE? I don't think so. Anyway, the point is, you know what I'll do actually? I'll show you a simpler example. If we look at a CPI, a normal CPI day, on a normal non-farm payrolls day, price comes back to those levels. So here's one level on the upside to look out for. NFP from last week. This is when Bitcoin rejected off of 72. That was the 7th of June. So if we go over to that one here, 7th of June, it's over here. This is when the news, the data came out. The exact moment of release was 12:30 UTC, as it always is, the 7th of June, 12:30. Here's the 12:30 candle. There's the CPI, or sorry, the NFP data. These levels, when they get left behind, offer good areas for price to come back and revisit. So that was an NFP day. This was a CPI, and this was also an NFP. So this is NFP for May. This is NFP for June. And CPI for June. These are good levels to watch because the market tends to, if it's not trending, return back and fill inefficiencies. So I would be looking at Bitcoin right now saying that it's very likely it will go all the way back to here. Why? Well, if you think about it in a simple sense, you don't usually get away with just longing the news, right? So there was a good CPI reading, and you notice that from the millisecond that from the moment the news came out, right, price pumped straight away, and everybody who FOMO'd long on that candle got away with it. There was nobody getting wrecked. Anyone who longed it all the way up, free money. That's okay if the market just continues to trend, which it didn't. It ended up coming back, and it's no longer trending now. It's now broken this level, and it's probably going to come back and retest that area and fill in the inefficiency. So anybody who got long and is still long, they now have round tripped. They're probably back to break even or close to it, and it will probably come all the way down into their stops. But we also have one from May, non-farm payrolls, when price was down near 50, 59, which also could be revisited. And the market tends to fill inefficiencies before making its move again in whatever direction it wants to go. It does leave behind inefficiencies when it's ready to go. So, like for example, you can see a few of these levels over here, right? And if you're looking at like typical moves, price dip below a low, impulsed away, trended up, came back, filled in most of it. Trended up again, came back, filled in all of this inefficiency. And then it left behind two gaps. Left one here and left a small one here. So when price goes in a strong trend and supply-demand imbalance is really in favor of bulls, you will see a move that has no pullback. But remember, there's a bunch of those further down. Right? There's lots of inefficiencies, lots of gaps, lots of untested areas on this chart that you can just eyeball them and see them straight away. Like I can see them, just all of them there. And many of those can and will get left behind, because when you look at how markets move, during bulls, the same thing happens here. So from COVID, you had a gap here that didn't fully get filled. This one did, you'll notice, pumped up, came all the way back, but then started to leave a bunch of them behind. Gap, right? That one filled back in. Gap here, gap here, gap here. What did it do? It filled in a few of them in the bear market. If you draw lines across, you can see here, that got filled in, retested. That got retested in 2022. That got retested in 2022. And this one didn't, the 12K one, which is the level that people were talking about. Oh, we have to go to 12K because the market doesn't have to go anywhere because anything. So that's important to note, because when you look at these levels here, a lot of people are calling for these to get filled. And rightly so. If you're a price action trader and you look at inefficiencies, you look at this inefficiency here and you'll say that should get filled. And you look at this price inefficiency here and you'd say, honestly, that's a pretty big one. There's a block all the way up from, 44 to 49. And we have this impulse here that has been partially filled, but not fully. And you're like, well, these have to get filled in. But they don't have to get filled in now or ever, right? Because again, don't forget, there's gaps all the way down here from 3K and 12K that will probably never get filled. Just like there's gaps from previous bear markets that don't get filled again. And even if they did, it could be at the end of the bull. So it's important to note this. And this is why you should test. So it might end up ripping way higher, bull market finishes, comes all the way down, fills in a bunch of that in a bear market, and that's BTC, right? Who knows? Not saying it's going to move like that. It's just a random squiggle. The point is, it can come all the way down here and look like, oh, it's definitely going to fill, and then just whoop, rip away up and not come back to it until 2025 or 2026. So the importance of that is back into what I'm saying about these lower time frame moves, because I am fairly confident that this June CPI one will get filled and we will make our way down into that full retest. That's a pretty clear level to see, should get hit. But I don't hold out an expectation that this May one has to get touched, because I also look at this and say, in the context of the bull market, where 60K, this 60K floor is rock solid, and we held it, and we held it, and we dip below it, and if that was just a trap, and then we retested it here, price may not need to come back there. Maybe price should not have ever been there. Maybe there was just no supply. Once it gets below there, nobody wants to keep selling. There's too much demand, and away we go. So I would be fairly confident that, if I had to guess, I would say it probably goes sideways here, last flush into that level, and then that could be the bottom. That would be roughly what I'd expect. And if that kind of setup happens, over here is where you want to get long. Anything else in between is short-term trading. I definitely think the odds are better skewed to the upside for BTC here. And I just wanted to note that, because what you should do is go and test these. You can go very easily. Any of you purple belts, blue belts in particular, white belts, I would focus on the white belt program and the back testing you're doing. But if you want to study the market, go and look at non-farm payroll, CPI, Fed meetings. It's all here. You can find all of them. You can find literally the last however many, more than you ever need. You can get all of them all the way back as far as you want to go. You can go back to 2014, do every single jobs market report, plot it on the chart, and then play the chart forward and see how long does it take for that level to get revisited, if it's on the upside or on the downside. A good study idea for you purple belts, scenario analysis, you'll know what I'm talking about. So as for BTC, I want to update now the volume profile. And let's zoom out. Let's go to a daily. Let's first of all remind you, the time to really get high time frame long bullish is when the bands go green again. So don't forget, we're in a downtrend. Yes, it keeps looking like a bottom. It keeps bouncing. It keeps finding the lows. But by now, you're probably getting sick of it. You're probably like, oh, I thought that was the low as well. I thought this was the low as well. I thought that was the low as well. I thought this. And that's what the market does. It keeps pushing and bouncing and pushing and bouncing, making new lows to frustrate people all the way until they give up. This example was same as April. Pushed, false bottom, false bottom, false bottom, big flush. Now, a lot of people look at that and say, oh, are we going to have another big flush? Maybe, maybe not. It doesn't have to mirror that. In fact, it almost certainly won't. The market doesn't tend to repeat like that on low time frames. But note this, note Ethereum. They're both still below those bands. Note ETH BTC, sorry, say that correctly. Bands aren't green yet. And that's important. I remember over here, I remember over here, several times where the bands looked like they're about to flip green and they didn't. So still a bit of patience required for that. With the ETH ETF expectation of launching soon, that should happen, should change. But Bitcoin is in, a precarious spot from the perspective of a lower high bounce. The people are looking at this saying, oh, it's double top, it's lower high, it's going to zero, it's all over. I lean the other way, but nothing's impossible. And the main thing to watch for me is this value area, which we have now finally touched. And so for me, I look at this and I think this is a daily chart. I'll leave the monthly open on. I'll leave the 2021 ultimate high on. And I'll leave this on because yes, it's moon above there. So the value area of this current price action phase, from the moment we got above this 57, which ended up being our range low, right to where we are now. And if I draw out this, I'm just updating it because obviously we've had more trading since then. Here's our exact value area now. This is the area for the bulk of Bitcoin's price action to have taken place. So there's room for a spike lower, a flush down slightly lower. You really don't want to see Bitcoin trading below 62 for any significant period of time. Deviations below it are fine, right? It's fine if it dips down there for a little bit and reclaims. That's totally okay. What you don't really want to see is that it starts to actually spend time there, because then it's building value lower and you're actually looking at much higher probability of a breakdown. But until then, this is a daily chart. It's taken us from the 7th of June to the 22nd. Right? It's taken us 2 weeks to get down here. It could take us a week at the lows. It could take us 2 weeks to climb back up. Right? It's not going to be something that will move instantly. And in fact, the way Bitcoin tends to move is that it probably chops around for a while, squeezes up, and then makes a sudden move. So if the bottom's forming, we're in the very, very, very early stages of it. There's no need to get ahead of yourself and try to, jump the gun with it. So as I look at BTC, as I look at ETH, as I look at the market as a whole, I think we're setting up for more downside unless something changes. But in the near term, I think relief bounces are at least being attempted. And I'll cover a few of those on Trade of the Day. GM. Do not forget, 5 p.m. UTC, massive crossover stream. Me, Adam Sillard. You're going to get the full range of what we think. Interested to talk to Adam, see what he thinks about the market, and Sillard, see what he thinks about the meme coin market. It's going to be G. Be there, 5 p.m. UTC.